Hello and welcome to the Argonaut Interrel webcast, Leading Practices in FCC Implementations. My name is John Harding. I'm a Consolidation Manager with Argonaut Interrel, and I'll be guiding us through getting the most out of our consolidation and close implementations today. Our first section will be Leading Practices on the Ideation phase. The Ideation phase is an important part of a Oracle Financial Consolidation and Close implementation. We want to get the most out of our implementation. Starts with the ideation and design of the application. For most of our clients, consolidation systems are usually only redesigned every 8 to 10 years, and our businesses are constantly evolving, constantly changing. So we want to use this as an opportunity to step back, rethink our current solution. How does it interact with our current business practices as opposed to our business practices when it was implemented? That's why I'm saying I like to think of look to where you want to go, not where you were years ago. A lot of clients want to just look backwards, and really this is an opportunity to look forwards on where you want to be as an organization, as a team, as a company, reporting numbers internally or externally. What is your goal with that? So the first thing to make sure is we want to be sure that any design that we implement can support the reporting needs. We need to look at what's our end game. Our end game, is it a 10K, 10Q? Is it a internal management report? Whatever that end game is in reporting, we need to make sure that our design can support it. But above all else, we need to be honest and open about our requirements. No hidden agendas, no secrets. Open, honest communication within your team, within our team, and between the two. Some other key points during ideation. Again, this is a quote that I like to look back at. Those that fail to learn from history are doomed to repeat it. We don't want to repeat what we've been doing all along. We want to look at it, learn from our success, learn from our failures, and then transition to a new process. FCC is more than just a software package, a tool. It's an opportunity to reinvent yourselves and your processes and go from what you're currently doing to what you want to be doing or what you should be doing, and not just today, tomorrow, next month, but next year, 2 years, 3 years, 5 years. One of the things you definitely want to think about is removing any unused metadata or reports, trimming back historical years. A lot of your applications may go back 10, 12, 15 years even. Do we need to keep that data? No, really, realistically, we only want to keep the data that we need within the current consolidation application. Embrace the why, and avoid because we always have trap. Again, like I keep saying, is why are we doing something? And the answer, because we always have, that's not a good answer. Why are you doing something? Does it need to be done? Is it something that could be done a different way? At the end of the day, we want to get to the same destination, but we don't have to follow the same path. Another key part around ideation is to ensure that all stakeholders are at the table. We really want to make sure that we've got all the people involved that need to be involved. External reporting, accounting, tax, internal audit, FP&A, whoever needs to be there, we need to have them there. I want to have everybody's voices heard, everyone's ideas heard. And at the end of the day, it's okay to disagree. We don't always have to agree. Your implementation partner doesn't have to agree. We all don't have to agree on every point. What we have to do is just understand each other, hear out each other's ideas, and then come up with what the best solution is, regardless of whose idea it was. I think one of the key things we need to know is, are you ready for change? We talk about change. People like to say they want change, that change is good. In practice, not so much. So we want to make sure that people are ready for change, and that leadership is driving that change. The organization as a whole is accepting of that change. Depending on the level of change going on, it may be a good idea to put in some structured change management around this project and really drive home the change through a structured organization of people dedicated to communicating that change out to the community. Next part of the ideation is really talking about a big topic within the Oracle EPM Cloud: configure versus customize. Oracle provides us with a lot of great opportunities, a lot of tools where we can just configure the out-of-the-box tool to your particular needs versus customizing things to your particular needs. And this is a very important point because the Oracle tools are really designed for configuration first, customization second. So we want to make sure that we're utilizing out of the box functionality unless we absolutely have a real business practice that just can't fit out of the box, and we can customize. So when we need to, we can customize. It gives us the ability to customize as we need it. So some examples of customizations that we wouldn't want to do, or more configurations, would be FX overrides, ownership, automated cash flow. What we want to avoid is moving our existing on-premise applications directly into the cloud. We want to rethink, redesign what we're doing and why we're doing. We don't want to, again, stay in that trap of we're doing it because we always have. We want to do it the right way, the best way, and we want to use the tools that Oracle gives us that are industry leading to do that. We don't want to be the outsider. We want to be the leader. And to be the leader, sometimes you have to follow leading practices. The final item, again, I can't stress this one enough for everybody, is prototype, prototype, prototype. We want to see what's in the system. We want to see the new members. We want to see how things are working. Building a consolidation tool is not theoretical. It's not something that you can't see. You can see it, you can interact with it, and that allows you to catch the problems or spot enhancements that you might want early on, and that we're not fighting against the thing with that. Another phase of the ideation is data integrations. It's really important to stop and think about, where is our data coming from? How are we going to get that data into the system? How are we going to transform it? Where else is that data going to be needed? Are we going to need to take that data out of FCC and put it into other applications? That's why it's really important to draw the metadata integration flows. Use Visio, put it up there, show lines, color code them, let people see where the data is coming from, where the data is going to, and make sure that when you name things, set a standard. Don't give it names that don't make sense. Give it names that are standard. Start off, target underscore source underscore scenario, something like that, and stick to it. Make sure you're getting your IT department involved, anybody around the ERP systems involved. We don't want to surprise anybody. We don't want to find out that IT needs notice for something. We don't want to find out that the ERP people don't want us doing something. We really need to make sure that we've got everybody at the table to start with. In a perfect world, we're going to go directly to those systems. We're not going to get flat files. We're just going to go query those systems, pull in the data. Again, perfect world. So that's our preferred option. If we can only get flat files, we can definitely work with them. But again, trying to go with our leading practices. And if you're going to do drill through or write backs, make sure that everything is configured for that. We're going to have all that cleared up with our ERP people before we're going to get started on that. Our next section, we're talking about leading practices around the design and build of the application. When you're creating an FCC application, there's going to be a creation wizard that's going to walk you through a lot of the setup on there. What's important to know is what are options that we can change later, and what are options that are kind of set in stone. Once you pick them, you'd have to rebuild the application to do it. One of the big ones around that is what's your main currency. You obviously want to make sure that you're selecting your start year, your main currency, and whatever the first month of the year is. You can add late years after creation. You can't go and change the currency. You can't go and change the start year. You can't go and change the start period. Again, as we're going through here, some of our options around balance sheet hierarchy, and really most of our clients choose the basic option. It's going to give them the most flexibility and the least number of seated members in there. Some of our other options here include setting up journals, intercompany, indirect cash flow. To be blunt, if you're using FCC, you're going to want journals, you're going to want intercompany, and you're probably going to want indirect cash flow. Multi-gap is a per client thing. If you need multi-gap, it's a great option. It does have the ability to calculate them for you. Downside is it takes one of your 4 custom dimensions. But again, as we're talking about it, custom dimensions are available there. So, but it does take 4 of those. Again, some of our application creation options here, these are going to be client specific. Best practice is not to enable any of the ratios. If there's a ratio calculation that you do need, we can help you write it in a more appropriate fashion. Oracle kind of takes a all or nothing approach, and it tends to slow the application down, and not really give the clients a good return for what they're looking for. We definitely want to make sure translated currency input, contribution input, all of those adjustments are selected. Your custom dimensions, this is one of those things you can't change later on. So we always enable all 4 custom dimensions. If we don't have it, we set up as placeholder, custom 3, custom 4. But really important to think through what are your custom dimensions going to be? Is it going to be product, cost center, region, plant location, whatever it's going to be? We want to make sure that we're giving it good solid name. So if it's going to be the cost center dimension, let's call it the cost center. If it's going to be product, call it product, and making sure that we're making good use of that. Ownership is here. We can enable it now. We can enable it later. A lot of clients don't even use it. So just keep that in mind as you're going through here. Metadata, really the big thing here is just looking at some of the seeded members. All the dimensions are going to come with seeded members, and we need to just keep in mind that anything that starts with FCCS underscore is a seeded member. You can change the alias. You can't change the member name. You can't delete it. Don't try. And these are here to help with the application, help with Oracle support, and provide a lot of that out-of-the-box functionality. Top thing is we want to make sure we have unique member names. We don't want to have different names. That's why we tend to preface things. So you'll see E for entity, A for account, just making sure that there's uniqueness across every single member of the application. Continuing on with the design and builds scenarios, we're all familiar with those. Actual, budget, forecast, any other types that we can have there. Years, again, we can set the start year. We can't change the start year. Period dimension, need to make sure that we want to have whatever our start period is. We can have 12 periods or 13 periods, quarterly views, half views. The view dimension comes out of the box. We can't change it. It cannot be altered. Comes with a couple different things. It's periodic. The data in FCC is stored periodic. So it's going to be the periodic dimension. There's the year-to-date dimension, quarter-to-date. We're going to be loading year-to-date values. So when you load data into FCC, we like to load it year-to-date. There's going to be a member, and that member is called year-to-date underscore input. And that's just for loading data. As soon as the data is loaded and submitted, FCC is going to take that, put it into the periodic, and calculate the year-to-date based off of that. So just want to keep in mind that those are there. An important dimension in FCC is the consolidation dimension. Again, we don't have any ability to change this. Comes out of the box. You can't add members or remove members. Important to understand, but also important just to know that it cannot be altered or changed. Coming up on our next set of dimensions, these are, again, probably one most everyone's familiar with is account dimension. And FCC comes with its standard account dimension. Depending on which hierarchy you select, depends on how many seeded members. Most of our clients are going to pick the basic because they want the fewest seeded members. They want to customize the application and the hierarchy for their own needs. So account types are going to be pretty simple. What you're used to: revenue, expense, asset, liability. Determines how the account is translated, how the data is presented, which consolidation operator you need to have on it. And that's going to be very important. One quirk to note about FCC is that the income statement is going to be underneath your equity. So when you come out there, you're going to see under retained earnings, you're going to see all of your income statement down there. Not a big deal. Another thing to talk about is for us, really best practices is that all of our level 0 accounts are going to be a uniform length account name prefixed by an A or another unique identifier. We can have alpha character names for the parent accounts. Really, our level 0 accounts, we want them to be, A12345, A12345, 12346, so on and so forth, so that they make sense and that they're, again, numbered consistently. So, your assets are 1s, your liabilities are 2s, your equities are 3s, so on and so forth. Another thing we want to make sure when we're setting up our account dimension is that we're using the default movement. So every account's gonna, base level account's gonna have a level 0 is going to have a default movement assigned to it to assist with the cash flow. Our historical override accounts are going to be selected rate or amount override, and that's going to be important if you're doing any historical override amounts. One thing to keep in mind is if your account is under the balance sheet hierarchy, we're not going to be able to use a member formula on it. So just keep that in mind as we go through this. The next section is the movement, and the movement dimension is where we do the cash flow. So as we're setting this up, the movement dimension is going to look a lot like the lines in your cash flow. We're going to have members underneath it representing all of those movements. And then those movements are going to be assigned to accounts so that when you load data, FCC is going to take in and have your opening balance, your ending balance, and that change of that account is going to be your movement. Continuing on with our understanding, this is the entity dimension. And the entity dimension really drives the consolidation elimination in FCC. When we think of entity, a lot of people think entity dimension has to be the legal entities. It can be your legal entities. It can be your business units, product lines, really any grouping that you want the consolidation elimination to occur. At the end of the day, we're going to want to make sure we have a hierarchy of your legal entities, but it doesn't necessarily have to be just legal entities if that's not how your organization is set up. You can have alternate hierarchies as well. So if you want to look at something in a legal view, a product view, a regional view, we can have alternate hierarchies within the entity dimension. Like I said, it's the dimension that drives intercompanies. So for that purpose, we want to make sure we only put level 0 entities for intercompany. You never want to have a parent marked as intercompany because you really shouldn't be having an intercompany transaction with a parent. Entities change, entities move, and you want to make sure that the intercompany transactions go with them. Again, our best practices in terms of setting up the parent currencies in those applications is making sure that in our main hierarchy, all of our parents are a single currency. So all of our translations are happening in the main currency of the application. We can have secondary hierarchies with different parent currencies, but for the most part, we want all of our eliminations to occur in the main currency of the application. One quirk, or not quirk, with FCC is because of the out-of-the-box logic behind the scenes doing the eliminations, our entity dimension is not set as addition. There's no aggregation with it. There's a consolidation. So we always set the consolidation operator to ignore. Talking a little bit about alternate hierarchies, they're available in most dimensions, account, entity, custom dimensions, and alternate hierarchies are really just sharing the member. You create a shared member. Really a great tool to use so that people aren't aggregating things in Excel. We're not adding them up in reports. If you need to see a group of accounts summed up, you need to see a group of custom members, create an alternate hierarchy. I cannot stress this enough. Do not share parent level entities. Only share level 0 entities. If you share parent level entities in alternate hierarchies, you are going to have problems with your intercompany eliminations. Don't do it. One other area that I think is really important is additional aliases. So we can have multiple alias tables. So if you have accounts or entities or other members that need to have different names for different purposes, maybe for internal management reporting, it's got one name. For external reporting, it's got a slightly different name or capitalization. Maybe you're doing some special regulatory reporting, these have a special name. We don't have to create new members. We can just say, give me an alias table, give me a default alias table, give me an external alias table, give me a management alias table. And those members can have multiple aliases, and we can reference those in reports or in SmartView files. Moving right along, our next section of the design and build, we're talking about calculations and how should we calculate data. So we've got a couple options here. So configurable calculations, we call these insertion rules because Oracle gives us places where we can insert these rules into the out-of-the-box consolidation. So unlike a planning application where you might have 10 or 20 or 50 rules to run, really within FCC, you're really just going to go and run your consolidation. So all of your rules are going to be embedded within that consolidation. These rules are created using S-based calc scripts. Not every functionality is going to be available, but it's very similar to that. So anybody who's used to writing planning rules or S-based calc scripts is going to have a good idea of what they're doing. Pros on it, it's flexible, it's powerful. They run on every consolidation. Your data is stored, and you can put them on any account. So if you've got an account under total balance sheet that you need to put a calculation on, you can do that with an insertion rules. Now they can impact your consolidation time. They increase your application size. they can become a little complicated to write, and also at the same time they do run all the time, and in some instances we don't need a rule to run every time. The next step down is what are called on-demand rules. And on-demand rules aren't run during the consolidation. You run them individually as needed. They're usually run post-consolidation on specific data sets that are run after consolidation. Again, they're flexible, they're powerful, the data is stored. Now the problem is that they don't run during consolidation. Sometimes you require consolidation after they run, and sometimes on-demand rules can get a little complicated and they can run for a long time. So there can definitely be some positives and some negatives to on-demand rules. Member formulas are a third option. Member formulas are dynamic calculations in the metadata directly on the account or the scenario or the custom or even the movement in a DSO application. Pros of these is there's no impact to consolidation or application size. They're usually a little less complex, a little less overhead to work with. Cons, you can't run them on an account under total balance sheet. You do have some limits on the complexity. It can change the display times of your reports, your smart views, because again, it's dynamic. It's only running that calculation when you're looking at that slice of data. So until you look at that slice of data, there's nothing there. And that goes back to the data is not stored. So it's not increasing the size of the application, but again, when somebody's running it, it's going to do it. So what's the best option? What should you choose when you're doing this design? And one of the things that I think about is avoiding the unnecessary customizations, avoiding unnecessary complications. And a lot of times the insertion rules and the on-demand rules add complexity, add difficulty. A lot of places you'll see people want to replicate their rules from a historical on-premise solution. You don't have to do that. Let's stop and think about why you're doing it, how we can get there some other way, and how we can leverage the tools Oracle gives us to get there without taking those 10,000 line HFM rules files and trying to recreate them in the cloud. That's counterproductive, and it's going to lead you to a bad FCC implementation. You're not going to be happy with those results. We've had a lot of success implementing FCC without any configurable calculations or on-demand rules. We've been able to use data integration, metadata hierarchies, and member formulas to really get the best results. So we're not talking about small companies here. We're talking about major household name companies, tens of billions of dollars in revenue, complex reporting that we're able to do without any insertion rules or on-demand rules. Nothing more than member formulas and, like I said, leveraging everything. Going through my mind, what I always say is step one, will a member formula work? If a member formula is not going to work, will an on-demand rule work? If not, let's move on to a configurable calculation. Continuing on, design, build. We have ownership and configurable consolidations. Out of the box, FCC is going to allow you to set up this ownership, and if you set this up, it'll allow you to do some configurable consolidations within the application. Ownership is really pretty simple. You have an ownership method, a percentage, however it's owned. So if something's owned 50%, 25%, is it not consolidated, equity method, subsidiary method, we can go and check those. One thing to keep in mind is that all entity hierarchies need to use it if it's enabled. All scenarios need to use it if it's enabled. And we need to make sure that we also understand that it's going to add some accounts to our application, and we're going to have to copy that ownership from year to year. So, but we can set up per period. So we can kind of replicate the HFM org by period if you want to, saying, in January, February, this entity is owned 0. In March, it's owned 100%. And we can do that across the hierarchies. So in doing this, it gives us some flexibility here around that configurable consolidations. So with configurable consolidations, we can deploy out-of-the-box consolidations. We can configure out-of-the-box consolidations, and we can create our own configurable consolidations. And you'll see this down here in our configurable consolidations. And when you click on this, it's really neat. It's not like you're going to have to go and write code. You're going to come out here and you're going to see configurable consolidations. And It's going to give you some options to select them and deploy the out-of-the-box ones that Oracle's provided us. Or what you can do is if you come in here, we can write our own. We can write our own configurable consolidation, goodwill offset in this case, or whatever your case, whatever it may be, using all of these parameters. Very user-friendly. There's not scripting, there's not code, there's selecting boxes. Keep it simple, keep it clear, name it well. Work hand in hand between implementation and accounting to make sure that we're getting these right. These are usually sometimes a little complicated and there may be some parameters around it. Test it, test it, test it. These are powerful rules. They're going to dramatically change how data is consolidated and reported in the application. We need to get these right. So make sure you're working with your partner, testing them, checking them, understanding what they're doing for the future. Data integrations. Again, so we talked a little bit about data integrations and ideation, but now we've got to build all of these different things. So again, start off, leverage using EPM Automate. Utilize data exchange when you can. Data exchange is kind of the new feature functionality of data management. It's still there, but Oracle again talks about that possibly going away. When you're working it, use the workbench to help facilitate your data validation. In the workbench, you can view the member mappings, make sure things are getting mapped properly, view the source file, view the output. You can filter it, you can export it to Excel. It's going to be a very powerful tool in that data validation process. Make sure you look through identifying successes and failures in your data load file and understanding how that all works. So be clear about that. And again, one thing you're going to hear time and time again about a good implementation, naming conventions. Set them up, stick to them. We want to make sure that whenever somebody comes in and looks at our application, they can clearly understand what we're doing and why we're doing it without having to have any explanations or anything like that. So let's make sure we come up with something and we stick to it. Cannot stress this one enough, backup procedures. In EPM Cloud, Oracle takes a nightly backup. They keep that backup for exactly 24 hours until they take the next nightly backup. We want to make sure that each night we're taking that backup that Oracle makes, we're downloading it to our local server or our own cloud storage system, and we're keeping a set of those rolling nightly backups, 7 days, 10 days, whatever your organization deems is appropriate. We keep those. This is all done using EPM Automate. It's all done behind the scenes. It's important to do it. It's important to start that backup procedure during development so that we have those there. It's important to also make sure that we're testing those backups regularly, once a quarter or every so often you want to take those. Make sure the backups are being taken. I can't tell you how many times people have thought they're taking a backup and they go out and look and they're not. And then we also want to make sure that those backups are working. Restore it to an empty pod. Make sure that it looks good. And make sure that you're setting your daily maintenance to a time that doesn't correspond with when you're trying to tell the backups. You want to coordinate that. If you've got multiple pods, multiple applications, I strongly urge you to set the daily maintenance window to be the same time. Oracle gives us a great tool called metadata validation. You can validate your metadata. Right there within the tool, you can go and run that metadata validation prior to refreshing the database. It catches a lot of your errors. Make sure that you're not putting them in there. So if you've got if you've got the incorrect consolidation operator, if you've got a level 0 member marked dynamic calc and there's no formula on it, it's going to call you on it. Run it every time, fix the errors, understand the errors. You don't want to get in a situation where you've got a lot of errors in the application. Oracle can be very particular about that. It's just not good practice, and it can lead to some problems down the road. Moving on, we're going to talk a little bit about our leading practices around integration testing and user acceptance. So we've built our application, we've ideated, we've built, now we're back to user acceptance testing. and integration testing. So integration testing, part of it is mappings. So make sure that when you've built your mappings to transform the data, that you've avoided using large volumes of explicit mappings. You're using the SQL mappings, you're using like mappings, you're writing as few maps as possible. We want to be as streamlined and simple as we can. We use explicit maps when we need to, not out of necessity. So just don't get in there. Also, a good opportunity when you're thinking about it is how much transformation of the data is really required. So again, all things to consider and think about. Integration testing, very important. Integration testing makes sure that we benchmark our system performance, keep it in line with expectations and historical performance. We don't want to provide a solution that's out of balance with expectations. Gives us an opportunity to test connectivity between on-premise and cloud solutions, test automation procedures, test the migration procedures. One thing that you definitely want to include in here is do some negative testing. Make sure that things that you expect to fail do fail. And above all else, make sure all of the teams that need to be involved are involved. Make sure your IT is involved. The ERP people may need to be involved. Audit might need to be involved. If you're doing a project with workforce, you may need to get human resources involved. Get everybody involved and make sure that it's all working. After integration testing, we get to our user acceptance testing. And this is hugely important because this is where the users are going to go in there and test the application. They're going to make sure that they're getting the results that they need to get to do their jobs and provide the output required of them. So users are key. Make sure that it's the right people doing the task. We don't want people doing UAT that aren't going to be the ones using the system. So we want the real users in there testing it, giving it the once over. So we're going to want to make sure that test scripts are created that really follow the business process. This is done by the client most of the time because I don't understand your business process the way you do. We want to make sure that the clients are coming up with real use case scenarios around the application. We want to make sure that all the functionality, all the financial reports are being tested. Everything is being tested. We want to use the UAT to continue training and education of the end users. Give them an opportunity to go in there, run those reports, enter data in those forms, create journals, do all the things that they need to do. We want to make sure, though, that we're maintaining a record of the testing status. If there's a problem, who's responsible for fixing it? When are they expected to fix it? Make sure we're following up on that. Make sure that people understand UAT and data validation are two different things. Here, we're testing the functionality of the system. We're not testing the accuracy of the data necessarily. We're just going in there and making sure everything works. Be sure to include reporting, smart view, and data integrations. If you're using the drill back, test that. We want to make sure that if there's a problem with it, we've got that handled right away. So we've built the application. We've ideated the application. We've built the application. We've integrated the application. Now it's time for us to go live. Probably the hardest part of any consolidation application project from the day I started this until today is data validation. It's going to be one of the hardest tasks of the implementation. Be ready, have a plan, have it organized. We need to make sure that we determine the appropriate level of data validation. Do we want to validate every single intersection of data being loaded? Probably not. That's going to be a lot of work. But what we want to make sure of is that we have a methodology and that there's agreement in all responsible parties prior to starting the validation. Make sure your audit is involved, internal audit. Make sure executive and management is involved. Make sure that anybody who's going to have to sign off on this application prior to go live has their voice heard during data validation. And make sure they understand the methodology. Are you doing a bottom-up validation where you're validating from the bottom up to the top? Or we're doing a top-down validation where we're going from the top down and we're spot checking problems and picking things to make sure of. Make sure that we've got templates and assignments before we're starting. Make sure people know what's material and what's not. We don't want to spend 2 days chasing down $1 because $1 is probably not material. But if they see something for $1 million, we probably want to stop and investigate that. We want to know too, how are we going to resolve these issues? Is it going to be fixing a mapping and reloading data from the ledger? Is it going to be fixing metadata because we've got an incorrect operator or an incorrect account type? Is it going to be a journal entry in that it's historical data that for some reason just is not agreeing, and we just want to go and fix it? Do a journal entry, fix it that way. So very important part of the project. Oftentimes where we hit significant delays in getting this done. It takes time, it takes effort, it takes attention, and it's not a fun process. We don't want to have to do it multiple times, so we want to get it right and get it done. Before go live, we always like to talk about journals because it's one of the key features of FCC. It's one of the selling points of FCC, and it's one of the things that people love about the tool is it gives us fully traceable, auditable journal entries to adjust data, both at local and translated currency. As with a lot of things we've said before, we want to make sure that we're using a good naming convention and we're using journal groups. Naming conventions, journal groups, meaningful descriptions of the journals are all important so that when somebody goes and looks at these journals, they understand immediately what its purpose is, why it's there, and there's an explanation about it. So we want to make sure that, again, good naming conventions. We really want to make sure that the users also understand the correct intersections for journals. I think we all understand account, entity, scenario, year, period, custom dimensions. Those are pretty simple, but users have to understand that certain journals are going to need intercompany partners and make sure they get those right. And importantly, they're going to have to understand the movement and make sure that they're getting the correct movement for that account so that it's properly reflected in the cash flow. It's important to maybe get them a guide, get an Excel file together so that they can go through, find what account they're using, and see the corresponding movement. It's also important to keep that updated in case the movement changes. What we want to avoid doing is we do not ever want to do journal entries to closing balance input movement. The reason for that is it will work for your journal entry. You will think that you are getting the correct result. Then you'll go to do your cash flow. You will not be getting the correct result because it will be forcing the change on the movement that is incorrect. We do not want to use that for the journal entry. It may seem like an easy way out. It may give you the correct results in your journals and in your balance sheet and income statement. It will not give you the correct results on your cash flow and cause you quite a bit of problems. Finally, make sure we're using journals correctly. Sometimes data should be entered via journal. Other times it may be a lot easier to do it via form. So if you're collecting some supplemental data, probably want to do that in a form, not use a journal entry. Now, if people are editing a journal, editing some data that was loaded from the ledger, we probably want to use a journal because of the audit tools around that. Some additional considerations as we're going through journals, they have to be balanced to zero by functional currency. So we've got to make sure that there's balanced. If we do need to do a one-sided journal entry, what we'll often do is we'll set up an account outside the balance sheet hierarchy, call it like journal balancing or something like that, and allow people to use that as a plug for the fact that the journal needs to be one-sided. We do have the ability to create recurring journal templates for recurring entries. In some cases, that's a good thing. In other cases, it's a bad thing. So we want to make sure that we're not just putting a Band-Aid on a bigger problem. If there's a problem with the data coming in from the GL, let's address it. Make sure we say, is there a problem with the GL that we can fix? Is there a problem with the mappings that we can fix? Don't just keep putting a journal entry every month on the problem. Investigate, fix it. When we're doing our reporting around the journals and things like that, again, you're going to be able to see those journal entries separated in the data source. And we can create data sources for journal entries specifically. So we can create our own journal data sources, and then we can assign them currency. So you can load journals at translated input, parent input for an entity. So if you have an entity, it's a Euro entity, and you want to do a journal entry to it in US dollars, we can create a data source for it, assign it to journals, assign it to US dollars, and you'll be able to do that entry. Finally, moving on with journals, just understand there's three different views that you can use with the journals. Most of our clients could be doing periodic journals. Again, you're just editing that amount for that period. Year to date, as it applies, the amount would be year to date. For flow accounts will reverse in the next period. Journal a date, amount carries forward from period to period, reverses in the next period. Very rarely used. I have yet to see it being used in any of my implementations. Most of my colleagues don't see it used. Not a whole lot of demand for that. System reports, great tools out of the box for us. Journal reports is a great one. Gives you the ability to show all different it's a configurable report that's going to allow you to show various parameters around your journals each month. In terms of accounts, entities, a lot of great configuration filters. You can save those out there. Make sure your users understand those filters, because they may go out there and run a journal report and not see what they're expecting. Is it all set up correctly? This is where using journal groups becomes very important, because it gives you the ability to quickly filter journals in those reports and provide those reports to people. So make sure there's journal groups, people are using them for the appropriate purpose. Probably the most important system report is intercompany report. One of the main selling points of FCC is the ability to do those out-of-the-box intercompany eliminations, use intercompany matching and eliminations. And these reports are really good at determining if there's any difference. You can run it off the plug account, and it's going to show you where those differences are. I have an intercompany with you, you have an intercompany with me, I have $1 million, you have 900,000. It's going to show up as a difference. It allows us to spot those differences quickly, fix those differences, reload our data. Since they run off the plug account, we don't want to have too many intercompany accounts assigned to the same plug account. That makes it difficult. Then instead of having a one-to-one relationship, if you have 10 accounts on expense and 10 accounts on income, it makes it harder to figure out where those problems lie. So try not to do that. Most of our users are going to run these often during the consolidation. They're going to keep pushing their data from the ledger, and they're going to use FCC to help resolve these intercompany differences. So again, keep running them as often as you need to. Make sure the data looks good. We do have the ability to set tolerances for non-material differences. A lot of our larger customers are going to set ones either dollar amounts or percentages, because nothing's ever going to be 100%, especially when we've got foreign currencies involved. It's translating to US dollars. We may not care if something's under $5,000 or something's under 3%. It's going to just show up there, and we can use that suppression and tolerance on there. Our next section, we're going to talk about some additional tools around available to us in the EPM cloud. Within FCC, one of our available tools is Task Manager, and Task Manager comes with FCC, and it allows you to organize and automate the close process. It's really a tool to organize your consolidation and communicate that status to users and management via dashboards and email communications. We're able to integrate with all of the other Oracle EPM products, as well as some of the ERP products, and bring tasks into the application so people can go into Task Manager and see those tasks. We can even automate some of them, opening journal periods, loading and unloading data. We can do a lot of different automated processes. We can do forms and planning in FCC, where we can bring you directly to the form with one click. Makes life a lot easier. We go out, we set up teams for these. We define completion dates, approval dates, predecessor tasks. Oftentimes that's the hardest part. It's just lining up all of the dates. When is it going to start? When is it going to end? When's the approval? Is there a predecessor? Is this task going to be a predecessor? Getting all of that lined up. So it's not a technical challenge as much as a procedural challenge, making sure everything's lined up, making sure people are assigned as the correct users, as the correct approvers, and going from there. As I said, it's included with the application. Use it. Start small, build upon it when your team's more comfortable with it. I would say every single FCC implementation we're doing these days includes some level of task manager, from a dozen tasks to a couple hundred tasks. Whatever your organization's ready for, whatever your organization's there, I strongly suggest using it. Another one that comes with FCC is Supplemental Data Manager, and I want to say before you determine whether you want to use Supplemental Data Manager, I think you need to understand what it is and what its benefits are and what its limitations are. It gives you the ability to collect data in a very organized fashion using forms and workflow and approvals. Very great about doing that. It's a very powerful collection tool. On the downside, its reporting and loading abilities isn't what some users think it's going to be. It only loads a summation of data to FCC. Reporting out of that collected data is not real easy. You can't look at it easily in Smart View. It's not accessible in narrative reporting. Understand those limitations before you're implementing. Ask questions, talk to your partner. It may be the right tool for the situation. It may not be the right tool for the situation. Please do not confuse the supplemental data manager with the collection of supplemental data. We can collect data using data forms. That may be the easier option. It may provide some better reporting. So keep in mind that when we use the term supplemental data manager, we're talking about a specific module in FCC, whereas the term supplemental data, lowercase s, lowercase d, is just data collection outside of the normal collection. The next administrative tool I want to talk about here is narrative reporting. And this isn't within FCC. It's a separate pod that you would need, but it's included with your enterprise cloud subscription. Really the most advanced reporting tool for EPM Cloud by far. Allows you to report across multiple pods, multiple products, pull them all into one report, gives you a unified single source of reporting for all users. They can go there, get their reports. You can establish reporting standards and policies, set up formats so that all of your reports look the same. One of the things, and I know drives a lot of clients crazy, is my reports from Consolidation look different than my reports from Plan, which look different than my reports from this tool. You can, using narrative reporting, you can set a standard and make sure that all those reports look the same, that there's that uniformity, that crispness, where somebody running a report, they're all going to look the same. They can run books, and those books can run reports from FCC, planning, all the different tools. But the only downside to it is it doesn't have a lot of connectivity with Task Manager. Not the end of the world. Also, within narrative reporting, it's going to provide you the opportunity to use their report packages. Don't have to use them. You can just use it for regular reporting. But again, it's out there. It's included in your enterprise license. And it's really the best place to do your formatted reporting out of FCC. And here we are at the end. Some final thoughts. I think as we go through ideation, my biggest thought on ideation is don't come in with preconceived notions. Don't come in thinking we have to do what we've always done with our consolidation tool. Be open to change, be open to new ways, be honest, be communicative, and be willing to listen to ideas that may be different than yours. I think it's a great opportunity, like I said, to redesign what you're doing, reinvent what you're doing, and give yourself and the organization a strong path forward. So really use that as a starting point and come in there with those ideas. And understand that at the end of the day, our goal is to have the best application for the organization. Design and build. First thought is make sure that you've designed an application that's going to support your reporting needs. Don't design an application unless it's going to support the known needs. It's going to get you to your 10K, going to get you your 10Q, going to get you to whatever other reporting that you need. That is also going to provide data that for downstream sources that you need. Do you need certain information in a planning application? Do you need certain information going down to a reporting queue? Make sure we can get that. But more importantly, prototype, test. Make sure that what you envision is what you're getting, and that you're catching any problems, small problems before they become big problems, and that before you reach a point of difficulty that say once you've made these decisions, it's a big change to go back, test it, prototype it, get people to sign off on it, ask questions. Testing, I think it's important. We need to make sure that we've got our integrations are tested. We make sure that they're working. We have a benchmark for the time. If that time changes, that's going to be an indication that there may be a problem, something to investigate. We also want to set our realistic expectations. We don't want people to think consolidation is going to take 2 minutes when it takes 10 minutes, but we also don't want people to think, well, consolidation in the on-prem tool took 20 minutes. It should take 20 minutes here. We want to set those things. We want to make sure that we have our user acceptance testing, that everybody's signing off on it, they're comfortable with the tool, that it's meeting their needs, that we didn't miss anybody's business practice. Everybody's able to use the tool to get their job done. We don't want people reverting to Excel, reverting to outside sources. We want them using the tools that we've provided and working within the parameters of that. So make sure that all of that testing is done, it's documented, it's signed off on, and everything is resolved. Between testing and go live, we've got data validation. Very difficult phase, but it's important. So have a plan, understand the plan, and make sure that the proper people are involved and the proper people are assigned tasks to work on it. Go live. Pick a good time to go live. Make sure that you've done some parallels. Make sure that everyone's comfortable with it. The users are comfortable with it. Audit's comfortable with it. Management's comfortable with it. Pick a good time to go live. We don't want to go live with our year-end reporting. Probably not the best. Pick a month that's going to be a little slow. Give yourself some lead time. Let yourself do that. By the time you're at go live, you should be comfortable with it. The parallels should be done, but make sure everyone's in there. And if you've got some level of change management, make sure that all of your objectives are met. Everyone's been educated, everyone's been trained, everyone's been comfortable. Finally, the additional tools. Again, there's some great tools and value in the Oracle EPM Cloud with the enterprise subscription. Make sure you're taking advantage of that. It comes at no cost to you, other than some implementation and some education. Use the tools. They interact together. They're designed to be used together. Use them together. And again, if there's any questions, any comments, please reach out to us via email at info@argano.com.